Welcome everyone to Indian Bank third quarter FY22 earnings call. We have with us today Mr. S.L. Jain, who is the MD and CEO of Indian Bank. Along with him, the top management is also there, including Mr. Shinoy, the Executive Director, Mr. Imran Siddiqui, the Executive Director, and Mr. Ashwini Kumar. First, would request MD sir to brief on the key highlights of the third quarter FY22 results, and also provide the near term to long term outlook on the bank as such, post which we can have a Q&A session. Over to you, MD sir.
Yeah, good evening and welcome to all analysts and investors in our Q3 FY22 earning call. So first I will give the highlights of the last quarter. First is our operating profit has grown by 16% on a YOY basis to 3,288 crore from 2,846 crore. So growth in operating profit. Our net profit has grown by 34% on a YOY to 690 crore from 514 crore. Our NII, net interest income, has grown by 2% on YOY to 4,395 crore. As you know, on the December 20, there was a Supreme Court stay for declaring any account as NPA, and therefore the income was booked in and the provision was made. Sequentially, on a QOQ basis, our NII has grown by 8%. And our cost of deposit has come down, on yield on advances has increased, yield on investment has increased, resulting improvement in our NIM from 2.89% in September to 3.03% in December. Likewise, in addition to increase in NII, there is a growth in non-interest income by 36% on a YOY basis. This is supported by a growth in fee income by 11%, growth in forex income by 32%, PSLC by 47%, recovery and bad debt by 111%, and operating expenses remain more or less flat with an increase of around 2%. So our operating profit and net profit growth is based on growth in NII as well as growth in other income. As far as business is concerned, our business has grown by 6% and reached to 9.63 lakh crores in December, is against 9.10 lakh crore in December 20. On a sequential basis, we have grown by 3%. So analyze it is 12%. In our deposit, the total deposit has grown by 8%. This 8% has grown on the back of 10% growth in CASA. So on our saving deposit has grown by 9% and current by 15%. As a result, our CASA ratio has improved by 80 bips to around 41% to around 42%. Likewise, our advances have grown by 3% from 3,89,000 to 4 lakh crores on a YOY basis. But sequentially, it has grown by 4%. And our RAM sector is growing 11%, and our RAM has reached to 61%. So RAM, basically retail is growing by 13%, housing is grown by 11%, personal loan by 36%, jewel loan by 43%, auto loan by 6%, other retail by 11%. So our retail engine is growing at 13%, or agriculture too is growing at a rate of 14%. The agriculture is grown on the back of jewel loan, which is growing at 24%. So 13% agriculture is back on the back of 24% jewel loan, where NPA is even 0.2% or so. And investment credit is grown by 30%, agri allied by 72%, and measure is SHG, we are growing 16%, where the NPAs are less. So MSME is growing at 6%. As far as our GNPA has come down from 9.56% to 9.13%. That is a reduction of 43 pips on a QOQ basis. And NNPA has come down from 3.26 to 2.72%. That is a 54 pips. Our PCR has improved from 83.32 to 85.49%. So around 200 pips. Our cash recovery was higher at 1096 crore. Is against 744 in December, and OCA recovery is 278 crore against 129 of the previous year. So both sides there is a good progress. Our capital adequacy ratio is 15.47. Of course, this has come down from 15.88 because of the growth in, mainly because of the growth in credit, and there is 200 crore of Tier 2 bond has gone for rediscounting. If you add a profit of the 9 months, it has increased by around 1 bps more. So it's again 15.47. It is around 16.45 or so. So this is the crux. And as far as our growth is concerned, our digital transactions are increasing. Net banking 25-26%, mobile banking 25-26%, and even that 40% on UPI. And as a result, what happens, our overall digital transaction has increased by 63% to 76%. And our cost to income ratio has again come down to 43%. And we are focusing on more and more digitizations. We have recently started our tablet banking, where we plan to open majority of the account through tablet. It will be easier for us to access the customers. We are also working with BCG or technology partner for digitization of various journeys, but personal loan, housing loan, auto loans, all we are working on that. And as far as growth for the full financial year is concerned, we are expecting that we will be in the range of 8 to 10% of the growth. The way we are growing, and in the last 9 months, we have sanctioned around 48,000 crore of a proposal, of which last quarter is around 22,000 crore of a proposal, and majority of the proposals are in term loan. And so what happens, that slowly the disbursement will start, and we will have a good growth in the current quarter as well as in the time to come. So this is my initial remarks. Now we are open for question answer.
Now, before we start, I think people will have questions around what's a broad outlook on growth, because that has been relatively weaker when we compare it with the other banks. I agree that basically there is a corporate drag, but your comments on that would be welcome.
So I told you, the year as a whole, we will grow between 8 to 10%. Of course, you are seeing that it is a 3% growth on a YOY basis. But you see the growth of Indian Bank of the last year, December 20 to March 21, vis-a-vis this quarter. So there's a good growth here, and we are hopeful that we'll be achieving this number. This is based on the corporate sanctions we are having in hand, and the way we are growing in the retail sector. Retail 13-14%, retail and agri both are moving.
Sure, but if you look at the 10% growth, it we are talking about almost 7 to 8% kind of a quarter-on-quarter growth. That looks very high. So is that a right number that we're looking at?
So you see, last time we have grown around, last quarter we have in corporate credit, we have grown in 3,000 crores. And you see in bond also, in investment also, around 2,000, 3,000 crore of growth. So considering the proposals in hand and the sanctions we are doing, we are hopeful that we will be able to achieve 8 to 10% growth.
Sure. Now I think we can start with the Q&A session, sir. Mr. Ajmer, I think you are first in the line. Yeah, you can unmute us.
Yes, sir. Congratulations to you, Jain Saab, for a very good set of numbers. The bank is really doing well in the last 2-3 quarters. Especially this quarter has been very, very good on all the fronts. But yes, as Anand said about there is a little concern on the credit growth side. So you have broadly said that it is 8 to 10%. But can we have that this pipeline? You see, generally the proposals which are coming are from infra, NBFC, metal, and food processing and other things. Can we know that in your bank, kind of other industries you are seeing a green shoots? And how are you going to match this higher credit only in this current quarter from January to March? And are you open for NBFCs A-rated plus for onward lending, co-lending? What is the roadmap for that? So my first question is basically on the little more in detail, minutely, on the credit side, growth of the bank.
So, sir, we are getting proposals from all sectors, which you tell whether it is a road, mainly HEM projects, or a textile, or a cement, or a petrochemical, right? or a steel. So all these sectors we are getting proposals, sir. So in addition to that, you talked about the co-lending. We have had an agreement with the seven companies. So we have started dispersing in our credit in co-lending as well. So we are growing in all, and all sectors of proposals are there, and we are open for everything.
Okay, sir. Having you received this answer on that, on the sir, we are seeing the pressure on the treasury income everywhere. I mean, whether you take it the treasury interest, of course, interest rate is going up, so little bit it will offset by the interest on the investment book, but the profitability is going down because of the hardening of the interest rates. So to preserve your profit or to grow your profit, are you totally looking at the credit side or even the non-credit income, like recoveries from the written off accounts on the fee front? So, say for example, I mean, how much the operating profit we are expecting during this quarter or for the full year?
It is very difficult to say the numbers in number terms. Growth in operating profit is very difficult to say. But you said about the treasury income and the yield is hardening. So this is basically a balance between your interest income and trading profit, right? So you see in a quarter-on-quarter basis, 500 odd crore of the trading profit we had in September is against 200. But what we have done, we have reached our churned over rather portfolio in investments. So, but we were having around 22,000 crore of a treasury bill outstanding because we were hoping that the interest yield will harden. So recently what we have done, we have shifted some of this outstanding into STM and AFS book. And basically these are high earning. So if I see my contribution of treasury of third quarter vis-a-vis second quarter, we are more or less at par. So going forward also, we were having the interest income, more of an interest income from the treasury. So with that will take care of any MTM losses.
My last question is, sir, on the recovery front. Number one is that the exposure, the National Recovery Construction Company, NARCL, now has already become fully operational. And this quarter, they will take some accounts. So out of that 50,000 crore in the first tranche, how much is yours in that? And on the NCLT front, how much are already approved recovery cases and what is there in the pipeline which we can see in this quarter and the coming quarter from the NCLT and some of the OTS and non-NCLT recovery track, if you can give, sir?
So what happens, initially 34 accounts have been identified to be transferred to NARCL. And in the first phase, 8 accounts of around 1,900 are to be transferred to NARCL. What happened in 3 accounts, the resolution has come. So now the 5 accounts amounting to 1,200 crore will be transferred to NARCL in the first tranche, and the second tranche around a 9 account of 1,300 will be transferred. So in all 34 account has been identified amounting to 5,500 crore to be transferred to NARCL. And as far as NCLT is concerned, last time we had a recovery of around 229 crore in the last quarters. So, and we are hopeful that this quarter also we will be getting more recovery than this.
Okay, sir. Thanks a lot, sir. Man of credit and recovery both. So I wish you all the best, and I'm sure that the bank will give a much better performance in the even coming quarters also. Thank you for giving me this opportunity, Anand.
Thank you, Ajmera sir.
Thank you, Mr. Ajmera. Next question we have from Mona Khetan. Mona, please go ahead.
Yeah, hi sir, good evening. So my first question is on the restructured book. So of this 20,000 crore of restructured book, how much would have completed their moratorium period, if you could give some sense? And what sort of slippages do you expect over the medium term from this book?
So see our restructuring book, it is around 20,000 crore, right? In 20,000 crore, 8,000 crore is retail, around 8,000 crore in MSME, 16,000, 13,000, 3,000 crore is in corporate, and 1,000 crore in agri. So little bit stress is seen only in the MSME sector. So of course we are curing through through the ECL, GS limits and all. But so far around 3% of account has been slipped from that. So we are not having undue worry on account of this, the time.
Okay, and how much would have, say, of this 20,000 book, how much would have, say, completed moratorium so far?
So basically, we have COVID 1 and 2 maximum 24 months time we have given
Right.
to this accounts, but we are not monitoring that way. But we are monitoring based on the SMA 0, 1 and 2.
Okay. So despite the moratorium across these accounts, they are still slipping.
Yeah, some of the accounts where the moratorium period is over or the interest recovery is not happening will slip.
Okay, sure. And secondly, on this, corporate slippages were about 955 crore this quarter. So if you could give some color as to where it came from.
So in this out of 956, two account of around 400 crore, 385 or so crore is basically the two accounts which were NPA in the previous year, but because of the court order, they were classified under the standard assets. So which we were disclosing all along in our quarterly results. So the two accounts, RKM Powergen and the Delhi Airport Metro. With these accounts, since the stay has been vacated, they have been classified as NPA. These are the half of this is this. One account of the Chhattisgarh government where we are expecting recovery very soon, it will come. And fourth account is basically a road project from 70 crore where the termination payment will be receiving from the NHAI.
Sure. And what sort of provisions do we hold against Shrey Infra as of now? It was about 50%.
Shrey we are having 100% provision we are having.
Okay. So that was the main reason.
This quarter we have fully provided this.
Okay, got it. And any exposure we have to the large retail chain?
Large retail, yeah, we are having some exposure.
Okay, if you could share the quantum.
It may be around 900 crores.
Okay.
But
and
we are having provision there against also.
Okay, and how much have we provided against it?
Around 15% or so we are having. As per the RBI guidelines.
Sure. And just finally on the tax rates. So what sort of tax rates can we expect going forward? Because I think the guidance was around, because of the accumulated losses, that we'll continue to see reversals. But this time, I think it was some foreign branch related expense. So what sort of tax rate can we expect?
Our tax rate is continue to remain the same. It was what happens. We have provided for certain liabilities. Of course, there is no cash outgo on account of this. These are the liabilities which are disputed, so we thought let us provide for them.
Okay. So once again, from next quarter, should we continue to see tax reversals on account of the accumulated losses?
Yeah. Right. This quarter, basically, we have made a full provision of Shrey.
Okay. All right. Got it. Thank you.
Yeah. Thank you, Mona. Next question we have from Deepak. Please go ahead. Deepak, please unmute yourself.
Yeah, thank you very much, sir, for the opportunity. So I just wanted to understand, like in the previous call as well, we have spoken about credit cost of about 2% this year. And but already in 9 months, I think we are at about 2.6%. So how do you see the outlook? So are we revising up our FY22?
No, see, what is our credit cost? Our credit cost is around 2.33%, right? So if you exclude the one biggest account where we have made 100% provisions, and these two accounts where we were already having this provision and lying in the standard asset. So if you net up these two items, it is around 1.6% or 1.65%. So barring these two, we are well within that.
Okay. And now since you mentioned that one of these large accounts you've already fully provided, so you have already fully provided. So going forward from fourth quarter, do you expect this credit cost to normalize?
Yes, credit cost should normalize.
Normalized means what? Less than 2%? I mean 1.5%?
No, it is very difficult to put numbers on that, but you should know.
Okay. And FY was way below 2%, right? So we are holding on to that.
Sir, I think he asked that basically whether your your credit cost will remain below 2%.
It is very difficult to put numbers, but you say what 2.33% is our cost. This is and if you exclude this number, it is 1.65%, and we are not having much of SMA1 and SMA2, so credit cost should come down.
Okay, understood. Oh, okay. Yeah, that's it from my side, sir. Thank you very much. All the very best.
Thank you, Deepak. Next question we have from Gaurav.
Okay.
Yeah, Gaurav, please go ahead. Gaurav, please unmute yourself and ask a question.
Hello, can you hear me?
No, your voice is very feeble.
Just a minute. Hello.
Yeah, Gaurav, it is better. You can go ahead.
Okay. So what I was asking is, there are three categories of restructured accounts: OTR1, OTR2, and then MSME related restructuring. Put together, it is around 25,600 crore. Sir, net of overlaps between these three categories, what will be the
Yeah. You see, it is not 25,000. What you have done, you have added COVID-1, COVID-2, and MSME.
Yes.
But
yes.
in MSME, majority of the accounts where we have restructured is already under stress. So there is a continuous stress on that. So majority of this MSME has been restructured in COVID-1 or COVID-2.
Okay.
So major part of it is overlap basically.
Okay. And sir, Air India, do we have exposure to Air India? And if yes, what is its status? Is it part of your SMA?
Now, Air India, we have a exposure of around 225 crore, which has been fully repaid.
Okay, it's only 225 crore.
Yeah, amount is already come.
And sir, Future Group?
Future Group, one exposure of 900 crore we are having, and we are having 15% of it.
500 crore, is it?
900 crore.
Okay, 900 crore. Okay. Thank you, sir.
Yeah, thank you, Gaurav. Next question we have from Rishikesh. Rishikesh, please unmute yourself. Rishikesh, we can't hear you. Please unmute yourself.
Hi.
Yeah.
Okay, sir, my first question is that I need to know how much carry forward losses are yet to reverse.
So carry forward losses are still there, and we will review our position on 31st March 22. So it will be available for next quarter as well.
Okay. And so what loan book growth are we expecting for next year?
I told you that we will be expecting around 8 to 10% of a loan growth in the current financial year. And next year, a similar trend should continue.
Okay, sure. And so fair to say, our credit cost should be much below 2% for FY23.
Yes, sir. Considering this SMA 1 and 2, and this time there's a large provision of this one account, and these two accounts, which were the provision were lying in the standard account. So next year our credit cost should come down significantly.
Okay, got it. Thank you, sir.
Yeah, thank you, Rishikesh. Next question we have from Mr. Sushil. Yeah, please go ahead, sir.
Congratulations, Jain sir, for the stable numbers. I have one or two questions on the outlook. One is post this NARCL movement, how do you see your gross NPA and net NPA numbers visible?
our gross NPAs, which has come down from 9.56 to 9.1, right? And we are not seeing much of a problem in corporate book. And you see on agree where major part is covered by the jewel loan. Likewise in the retail also there is no much worry. So our gross NPAs should continuously come down quarter after quarter, which I see.
How much of bad asset are we transferring to the new asset ARC? That's what I was asking.
We are transferring around 1,200 crore of a bad asset in phase 1. In phase 2 again 1,300 crores. But you see this will keep on going because we have identified 5,500 crore.
Okay. Now on digitization and human resource, what kind of initiatives have you taken which should benefit the immense talent of South India, specifically your bank?
Yes, right, sir. So what we have done in digitization, in liability side, we already launched our tablet banking and account started opening. So presently we are opening saving bank account. Shortly we will open a current account. So this is one part. In a lending side, we have 3-4 things we have done. We have a business intelligence unit. So based on the account behavior here, we are generating leads on daily basis, and these leads we are giving to our field for mobilization of business. So this is one aspect we are doing, and based on that we are capturing these retail accounts, even MSME account, and even the agri accounts as well. The one part. Second part is on a digitizations. We want to do number of journeys on digital. So that is why we came out with the RFP and selected BCG and partner, and we along with our team is working from last say 15-20 days, and we hope that in the first quarter, end of the first quarter, we will come out with the various products, and these all journeys we plan to come out on mobile. So digitization, of course, digitization, though our numbers are increasing, but it will further increase with these two initiatives. Liability side will be taken care by the tablet, and the lending side will be taken by these journeys. So we hope that there will be significant growth after June.
How much book have we created in co-lending so far?
So not much of we have sanctioned around 500 crore of a loan and the disbursement so far is around 200 crores. Yes, so 350 crore.
This would be more than housing and gold loans or some other loans?
Mostly housing loans. And now we have signed with the 7 companies.
Go ahead,
so this has started picking up.
Okay. What would you be forecasting over a period of time? How many partnerships or what kind of AUM you will achieve through co-lending?
So we have signed with the 7 companies, and we are open for other companies as well, slowly. So we will be growing this, but the momentum have just started. So we have to understand slowly. Maybe by the end of this quarter, we will be able to tell you how we will grow.
Sir, if I have to see CASA number at Indian Bank with a 1 or 2 year outlook, where would you figure out where would we stand in percentage terms, 42, 43 or more?
So you see in the 1 year we have moved from 41 to 42, and that is why we came out with the digital product. So we want to grow it from 42 to 44 or 45 in a 1 or 1.5 years time. So we want to grow it slowly, maybe 2% in a year or so.
Sir, in your part of that is Southern India, auto ancillaries and textile and related businesses like forging and others are doing very well. Are we seeing any traction from the industry, which are predominantly majors coming out of Tamil Nadu and adjoining states?
Yes, sir. We are getting proposals from all companies, whether textile, right? Textile, Tirupur and all. We are getting even the steel. We are getting even the cement companies. So we are getting proposals from our part, this part, rather from in addition to this part from other part as well.
Thank you, sir. And I'll connect back to you.
And you see, we have sanctioned around 44,000 crore.
So you have unavailed credit of how much today? What is sanctioned?
Out of this, recently sanctioned around 46,000. We have 16,000 is disbursed. So huge amount is lying undisbursed. In addition to that, working capital utilization is around 70% or so. There also is a scope.
So you are expecting a double-digit growth by March based on the current.
No, we are expecting around 8 to 10%.
That is on an annualized basis, you are saying, right?
No, on a YOY basis.
On quarter?
Quarter on quarter, naturally, we are at 3%, so naturally we'll be growing more in this quarter. So that way the percentage will be higher.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you, Mr. Chopsy. Next question we have again from Gaurav. Gaurav, please unmute yourself and ask your question.
Yeah, thank you for the opportunity again. Sir, I wanted to re-clarify the restructured numbers. So MSME restructured is around 5,200 crore, right? And OTR 1 is 4,500 crore, and then OTR 2 is 15,800 crore. Sir, if you could please, in absolute terms, clarify what is the net restructured number, and what is the overlap with the MSME restructured number?
I told you the MSME restructuring is close to 8,000 crores, right? So you see on slide also there are 6,800 plus 1,300. You add, it works out to be 8,100 crores.
Okay.
And as far as overlapping is concerned, since we have done the restructuring of the account which were under stress, and with the COVID, the stress is continuing. So major part of our restructuring MSME in earlier guidelines is a part of COVID 1 and 2 restructuring.
Okay, sir, MSME restructuring is 8,000 crore or 5,200 crore? In your filing, it is 5,284 crore, I think.
Which one?
MSME GST related restructuring.
No, which one? Total restructuring is 20,000 crore.
No, sir, I'm not referring to total. I'm referring to MSME GST related restructuring, which you have given on page number 7 of your financial filing. There is a note to account of.
Yeah. So that is basically not to point number
10.
Just a minute. Yeah, this is basically a restructuring, the disclosure as per the guidelines. So point is 5,000 crore of restructuring we have done. So this is based on those guidelines. But out of this 5,000, majority is covered under the COVID 2.
But sir, you said 8,000 crore number. Where is that?
So this 8,000 includes this 5,000, major part of this 5,000.
But sir, what I'm not getting is where are you getting this 8,000 crore number from? Because OTR 1 is 4,500 crore, OTR 2 is 15,800 crore, and then the number which I just mentioned, MSME restructuring, it is around 5,200 crore. So I am
just a minute. There's a number of account and there is amount, right? So MSME restructuring under COVID 1 is 1,313, and MSME restructuring under COVID 2 is 6,800. So okay. 1,300 plus 6,800, 8,100.
7,300.
8,100. Sir, 6,800 plus 1,300.
Okay, 6,800. Okay. So you are saying this 6,800, this 8,100 crore includes 5,200 crore of that.
Right, filing. Major part of this. Right.
Okay. And sir, just one more clarification on data. This you disclose, very nicely SMA1 and SMA2, on the entire book. So
yeah. We have disclosed entire, but you see in the corporate it is 0.44%. Only 0.44%.
Yeah, sir. That's very good, very commendable. Sir, can you, bifurcate this SMA1 and 2 further? What would be below 5 crore and what would be above 5 crore? Because most of the banks don't give above 5 crore.
Yeah, I agree with this. So most of the banks are giving above 5 crores. Above 5 crore means mostly corporate, right? Yes. So my corporate is 0.44% only, sir.
So, sir, is it fair to assume this retail, MSME and agriculture, all of this would be, below 5 crore in exposure wise? There will be no account from these 3 categories, RAM categories.
Just a minute. So if what? Just which one? Just a minute. So otherwise we'll give you the exact number. Understand this. So it cannot be major difference from this. It cannot be major difference from this. Maybe slight bit it will be added because you are right. Some of the MSME may be there for more than 5 crore. Sure, right? Sure. Retail cannot be happen and MSME, some MSME can be there. But it can be materially different. It cannot be materially different.
Sure, sir. And sir, what would be the overlap between your SMA number, which is 18,000 crore, and the restructured number of 20,300 crore, which is OTR1 and OTR2?
So again there is a overlap. Again, there is, because SMA1 and SMA2 will remain from the majority from the restructured book only.
So what would be that overlap? Because
so that number overlapping number will give our number.
Sorry?
Mr. Bansal will provide overlapping. But majority of this SMA 1 and 2 will come from the restructured board.
Majority of SMA1 and SMA2 will be from restructured.
Exact number will provide, sir. Right?
Okay.
Yeah. Thank you, Gaurav. Next question, we'll take it from Mona. Mona, go ahead.
Yeah, hi sir. Just one additional clarification. On the ECLGS book, what is our current outstanding and how much were the disbursements in this quarter?
Yeah, in ECLGS book, what happened, we have sanctioned around 9,885 crore. And we have disbursed 9,165 crore. And the balance outstanding is 8,768. So disbursement is 9,165 and outstanding 8,768. And last quarter we have disbursed 2,630 crore.
Okay, thank you, sir. And what is this difference between total cumulative disbursements versus the outstanding? Is it
so
like
some of the money has come because of the terms conditions. Some of the money has come. Some of the accounts have been closed.
Okay, got it. Thank you.
Yeah, thank you, Mona. So before we take our next question, we have one question which has come in the chat, and that is, if you can highlight, of your overall loan book, what percentage of loans will be on EBLR, which is basically the external benchmark, and if you can break it down into the T-bill linked rate loans, or basically to the MCLR linked loans, repo rate link loans, that will be great to have.
Yeah, that will provide you. Meantime, let us take a second question. Let me get the information.
Yeah, sure. And so basically another question which was there is that if you look at during the current quarter also, we had very high retail slippages of about more than 600 odd crores. So these retail slippages are primarily coming into the housing loan segment, because if you look at our retail book is largely built up of mortgages. So what explains? Yeah.
Out of the 600 crore, 250 crore is basically in education loan. Major slippage has come from the education loan, and our major education loan is towards the engineering college. Because you saw in South, number of engineering colleges are there. So because of the unemployment or underemployment, this or placement is not taking place. Maybe this is the reason. That is why this slippage has come. But you see our chart for slippage and recovery. What happens if you see our 9 months slippage put together vis-a-vis quarterly slippage? What happens is against 10,000 crore of slippage, we are having 8,000 crore of slippage. If you put together quarter on quarter, this is 10,000 crore. In 9 months, 8,000 crore. This shows that 2,000 crore of amount we have recovered. So if you see the first 2 quarters slippage, 8,000 crore. So out of 8,000 crore, we have recovered 2,000 crore. So 25% of the recovery takes place in the next quarter.
Okay.
These are small loans, small loans. So because with the 90 days over the account slip and next, and it is recovered because of small loans.
Sure, sir. Because I think education loan has been a perennial problem for us, right from 2007, 2008. When that postcard scheme was there.
So, but in our small accounts, the upgradation happens. Okay. So external benchmark basically is what happens. All our retail and MSME loans are based on the repo link. This is as per the RBI guidelines, right? So all retail, all MSME, this all put together around 42% is basically in EBLR.
Okay.
Because as per guideline, you cannot have on MCLR on these loans.
No, but then basically how much of these will be floating rate loans? So what basically we wanted to understand here is that that as the rate actually goes up, that is what is expected over next 12 months.
Yeah.
Then
So
how
this
much of your loans will get repriced automatically?
so automatically EBLR with the repo rate increases, it will increase. So all retail and
And
MSME will automatically reprice.
what will be the EBLR book, non-repo book?
That is MCLR book, na?
And T-bill as well, right, sir?
Yeah. So so 42% is basically EBLR, 48% is MCLR.
Okay. And T-bill will be part of the MCLR?
We don't have it. We have only
So
repo.
we don't have. So why is that so? Because a lot of banks are now moving towards T-bill because that is a rate which has been moving faster.
Yeah, this is auctional benchmark. You can link with the TV or you can link with the repo also. So, but it is linked not with the MCLR. So if you link with the repo, it is linked with the 4%, or T-bill, it is linked with the TV rates. So there is no difference between these two, to my mind.
Yeah, but if you look at repo has not increased, right? But the T-bill has inched up by about almost 40 basis point.
Thinking on those lines. Okay.
Yeah, sure. Next question, sir, we'll take it from Jay. Jay, please unmute yourself.
Yeah, hi, sir. Good evening, and thanks for the opportunity. So first question is, if I look at our restructured book, and now that the scheme has mostly ended, and if I compare versus other banks, our restructuring number is, as a percentage of loans at around 6% is way higher than any other bank. Most of the other banks are at around 3% odd. Can you comment, sir, what has led to such high number of restructuring at our bank?
So you see, on the 20,000 crore and the 4 lakh crore book, which is around 5%. It is around 5%. And ours is high because of 8,000 crore MSME and the 8,000 crore retail. So retail, we are not seeing much of an issue. MSME book is an issue where we are giving ECL, GS and this. Otherwise, the corporate only 3,000 crore of restructuring, nothing more than that. Only 4-5 account which everybody has done. So ours is higher maybe because of retail book.
Yeah, so sir, but within retail, have you come across any anecdotal, commentary or evidence to suggest that why retail restructuring in Indian Bank is higher? Because that is not the trend that we have seen at other banks.
Yes, sir, but in retail, you see, we too have given the bifurcation with shifting of this account to NPA. So you see that in NPA also they are not shifting. So we are getting recovery there also. In retail, though we have done restructuring, but we are getting money.
Hello?
Yeah.
Yeah, okay.
So ours is higher in retail because of this housing loan and all. But here also we are getting money, sir. So the slippage, if you see the slippage from the restructuring book, it is basically in MSME.
Understood. Okay. And sir, secondly, if you can comment on FY23 recovery and upgrades, basis the situation today, what kind of a recovery upgrade one can expect for 23 as a whole?
FY22-23, what happens? You see, is against the 2,600 crore of a recovery in 9 months ended FY21. We have 6,500 crore of recovery in the last year. And we see when you are having 36,000 plus 23,000 or 34,000 or 70,000 crore of a NPA book. So we are expecting the similar trend of recovery in the next year too. The way we are recovering this year.
Because this year, of course, there was Diwan recovery. There was one other, lumpy cases. Is there any?
Diwan is a lumpy case, but all we are having 23,000 crores. So one or the other always comes. So one or the other account always comes, and we are having 100% provision there against.
Okay.
When you have such a 34,000 of a PWO book, you are always have a good recovery there.
Right. Okay. And sir, on this large retail chain which is under stress, what is the total exposure? I think you had mentioned 900 crores, but does that include bond and maybe NFB? Because if that were to slip, probably, is that expected?
Total is 900 and we are having 15% provisions.
That is the total exposure, right? Including bond, NFB, everything.
Yeah.
Okay, sure. And sir, lastly, on our slide 16, just a question to CFO sir also. I mean, what are we following in terms of RBI that MTM depreciation, is that now a negative line item in other income, or where is it going? So slide 16 of the presentation, which
Sir,
has
it is a negative line item in other income.
Right. And sir,
Negative
this
or
quarter, if I see, this is actually a positive line item, 31
Yeah,
crore,
so there is a right back, sir. There is a right back.
despite the yields going up, right?
Yeah, there is a right back.
Okay. Okay. And the last question, sir, we have done accelerated provisions in this quarter, and hence our PCR has also moved up. If you can, if you have a broad park number, that what was the IRAC mandated provisions and what was the accelerated provisions that we did? I mean, that will help us understand, that I mean, whatever proportion is from accelerated provisioning based.
No, we are not doing accelerated provision on all accounts. We are basically doing provisions based on the IRAC and always take a conservative stand. So in SRAI, we are of course having 100% provision.
Understood. Okay. Okay, sir. Yeah. Thank you and all the best.
Yeah, thank you, Jay. Any other participant, if you have a question, you can raise your hand. So before that, we have one question in the chat box. What is our security receipts book and how much is the provision that we're carrying on that book?
This SR, you are talking about SR?
Yes, sir.
So around 3,396 some amount was there, and we are having close to 100%, 96.7%. We are having 3,000 something, na? Just we are disclosed also. Just a minute. 3,349, and we are having close to 96 and 97% provision. So 97.29%. 97.29%. So fully provided virtually.
Okay. And we have done some additional provision during the current quarter, sir?
No, in this we are already having 97%.
Okay. Sure. Yeah, participants, if you have a question, you can ask. I think one more question which has come in the chat box. From Sneha, credit cost outlook for next fiscal year and any easing related provision we need to provide possibly next year. So I think we have already talked about the credit cost outlooks, which is going to be less than 2%, right? I think that is the answer to the question. Yeah. And any easing related provision that you expect to be made next year?
No, you see our net NPA is only 10,000 crore. So how much will be the provision?
Okay. Sure. Sir, lastly, from my side, basically just wanted to understand what is our margin outlook, because now that we were talking about the BLR linked loans, how much is to the repo rate and stuff. So how do we see our margins going forward? Because I understand that we will grow faster, possibly next year. That is a hope. But even our costs is tend to go up. So how are you looking at the margins going forward, sir?
So our margin, you see, of course, this quarter it has increased, but it hovers around 2.75 to 3%. So we will be in this range also for next year as well.
Okay. And sir, beyond future retail, which possibly might slip next quarter, any other lumpy corporate account where you expect possibly it might slip in next 1 or 2 quarters or so?
Sir, 0.4% is SMA 1 and 2. So not a big worry that way.
Sir, I mean, it might just take, 1 quarter for the SMA book to just bloat up. Some big account might just come in that we don't know. There are some state government accounts which are under stress. That is what some other bank was actually
No,
talking
not
about.
in a corporate book, we are not having any lumpy accounts.
Okay. Sure. So yeah, any other participant, if you have a question, you can ask right now. You can raise your hand. I think, yeah, Gaurav, you have a follow-up question. Yeah, please go ahead.
Sir, can you your credit cost has been running at 2,500 crore odd last 2-3 quarters. Can you guide a bit, how do you see this based on your aging requirements?
So, sir, I told you about our credit cost, which is 2.33%, and because of these two or three accounts. Otherwise, if net of these three accounts, it is 1.65% also.
So in absolute
And
terms,
yeah,
what would be that, remove these lumpy account provisions, what would be the amount of that you would have done?
yeah, that is why I'm telling you that is 2.33 is my credit cost, right? So if you exclude additional provisioning or these three accounts which were NPA because of court order, but not NPA, but the provision was lying in the standard asset, and it has moved from standard asset to an NPA provision, resulting into an increase in the credit cost. So if you exclude this, it is even 1.65%, sir.
So it is around 800 crore for this quarter, the account related to.
Yeah, it is around 900 crore also. How much? Close to 900.
Sir, so can we assume from Q4 your provisions will be like 1,500-1,600 crore?
No, numbers, it is very difficult to set in numbers.
I'm asking broad range. I'm not asking.
But our provision should come down.
Sir, pre-provision profit?
So, you see our NII growth, right? And the way we are growing in last quarter versus this quarter, right? And now we are growing for this quarter as well. So the NII will grow. And you see in investment also, my spread has increased because I've shifted part of the securities from the T-bill to the SDL or government security. So it is giving me a more interest income. So my spread will increase. Expenditures are under control, right? And other income is increasing. And with the further recovery in write-off, because we are expecting a recovery in NCLT and other cases, and also the compromises which we have made. So going forward, numbers should be good, sir.
Thank you, sir.
Yeah. Sir, we do not have any further questions. I think we can wind up the call. I would like to thank you on behalf of MK for providing us the opportunity to host the call. And thanks all participants. So you have any closing remarks today?
Yeah. Thank you all the investors and analysts for having continuous interest in Indian Bank, and we request you to have continuous faith on us and the Indian Bank performance. Thank you.